Gold resumed its upward journey today. It has achieved 1880-1885 zone, which I had been talking about since the beginning of the week. I had mentioned that these levels are achievable, and it is precisely now trading within the zone. At the same time, US crude also has achieved 83.4 levels. I have mentioned in the Asia and Europe session update today that we can see a rise. Even if it has to drop, it can try to rise towards 83, 83.5 levels. That is also done. So now what to expect from gold and crude oil with the US session? And yes, there is also CPI data coming in before the US session, and the crude oil inventory data coming in later after the US session. Definitely it will bring volatility in gold and crude oil. Which position you should take and how to profit, we will see with the help of charts and indicators. Let's start. First gold, followed with oil. Watch till. If you appreciate the effort, do like, share, subscribe, and comment, friends. Your every like, share, and comment is a great support motivation for me to deliver to the best of my abilities. This is the second update for the day. To remain updated, join the free Telegram channel. The link is mentioned in the channel and video description. Now, first, let's have a look at the hourly chart. See what has happened on the hourly charts. It is formed, see, 4 candles getting the support here at 79 and 78 zone. Yes, if you want to sell gold, you can initiate a selling position only and only if you see it staying below 1878, but still you may see that there is going to be greater support at 1874.75, that is the first target, and then 1870, that is the next target. Only and only if you see gold is staying below 1868.70 zone, you can say that it has turned bearish, as it can possibly bounce back. How far it can drop if it stays below 1868.70 zone? See, 1865 first target, and then 1860.59 zone, the next levels here. Yes, there are nearby resistances. The supports are, the resistance earlier is now going to be the support here. Now look at the moment. See the consolidation, the rise, the consolidation, the rise, the consolidation here, and it is still staying bullish, consistently yielding higher lows here. Thus, it has to come out of the channel in order to confirm the bearish bias. At the same time, prices are staying elevated. Prices are staying divergent from the moving average, which is sitting right now at around 1877-78 levels here. Stochastic rising, MACD flat, RSI also near to overbought levels. Coming to 2-hour chart, look at the 2-hour chart. See 3 candles at the top getting the resistance at 1883 and higher lows here. So this is a squeeze. It has to come out of this zone. I will expect below 1878 levels is where the bears might try to take over, and then we can see a little more drop from those levels. 1870-68 may provide a little resistance before it looks over to any downward move here. And if you look at the movement, if you note, see this was the consolidation zone, and since then it has rallied. It can try to nullify these levels here. So possibly these levels are achievable here. Stochastic is overbought. MACD is still in green, trading with little divergence. RSI overbought here. Coming to 3 hour. Now look at the 3-hour chart. Similar observation after consolidation. First candle, second candle has just initiated. It is trying to resume its upward journey here. And beyond 1885 levels is where little bullishness will be confirmed, where one can expect 1890-91 as the first target. And then I will look forward to 1898 and 1900 levels. Yes, 1898, 1900 are going to remain a greater resistance. If you look at the prices, you see consistently higher lows. The prices are divergent from the 20 period, which is sitting right now at 1870.68. Yes, this is going to remain a great support here for the day. But right now, if you look at it, is still staying bullish. A complete reversal requires for it to drop below 1878 and stay on the downside. Moving averages looking divergent and are bullish. Stochastic overbought, MACD bullish, RSI overbought. So everything is overbought as of now. Look at the 4-hour charts. Moving averages trading with divergence, trading bullish, staying bullish, looking upwards. If you look at the candles here, see it has breached the double top and resistance levels on the upside, trying to move further, and staying above 1885 is where further bullishness will be seen here. 1885 is good resistance, and then we can look forward to 1890, and then see beyond 1885 actually the next major resistance is at 1900, 1898 and 1900 levels. Remember this fact. Beyond 1885 the next major resistance is at 1898 and 1900 levels. So though there is a slight resistance at 1890, but then you have to stay watchful. It can further accelerate its movement towards 18 98 1900 levels as well. This is going to be the very strong milestone which it would like to achieve. If you look at moving averages, these are trading with divergence and trading with extreme bullishness. You can see accelerated bullishness looking upside. Price is staying elevated and staying divergent from the 20 period moving average calls for it to converge a bit, but we have to wait for the right levels for it to stay short. Yes, 1878 could be one of the entries which might bring little bearishness towards 1868.70 or in fact 1860 zone. Stochastic overbought, MACD is divergent, bullish looking upwards. See, MACD has achieved plus 10 levels here whenever in recent past and last couple of months, whenever plus 10 levels are achieved, we have seen it reversing here. Thus you have to be watchful here. It can again reverse from these levels, though plus 10 is not something which is sacrosanct. We can see higher and accelerated levels we have seen earlier itself. Also, one must note that it is coming from extreme lows and it has stressed the rally, so the possibility of a conversion will increase from here. RSI is overbought. Coming to daily chart. Now, if you look at the daily chart, see first greener candle here, then a consolidation and then a bullish candle. This is the second bullish candle which is continuing to go or continuing to take the prices on the upside. Yes, it has come to the resistance level. It has breached the 1880 levels which we were expecting, and now it is looking forward to 50 period moving average right now and the pivot levels at 1890. So yes, 1890, 1894 and 1900 major resistances. What is happening right now is a recovery, and yes, it could possibly lead to a complete V-shaped recovery and resume its upward journey, but right now I think there could be a retracement. This should be still treated as a retracement. Also, if you look at, see, the candle has started flat and it has started at 1875 levels. It has resumed its upward journey here. The 20 period moving average is sitting at 1870 levels, and hence only and only if we see prices staying below 1870 can bring further bearishness here, which in fact, even if it tries to breach, I will expect 1860.59 as the major support here, and if it breaks below it, you can expect complete reversal of prices. Hence you have to be cautious there on the downside as well. Stochastic overbought. Look at MACD. This is divergent, this is bullish, this is just two candle aparts. And also one must note that this is coming from a extremely lower levels, and hence it can continue on the upside today as well. RSI is looking upside, and thus we can see a bullish candle forming. Thus, considering this, I will recommend you to buy here at 1885 levels. Beyond that, 1889.90 first target, 93.5 next, and then beyond that we will be looking forward to 1898, 1900, which is going to remain a great resistance. Hence we can buy here at 1885, which is a good buying position. On the downside, a selling position can be taken at 1878, but if you are selling at 1878, do it with caution. Support levels at 1874.75 first, 1868.70 second, and then ultimately 65 and 59.60 zone will come into picture. Only and only if it breaks below 59.60, you can say that it has turned bearish and it is going to crash further. Take your positions accordingly. Now let's have a look at crude. And before we proceed, if you want to learn this art of trading, you should join my mentorship batch. The 26th batch is going to start on 16th of October. Only limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now look at crude oil. See, forming the bottom here in the Asia and Europe session update today. And in fact, yesterday when we expected a drop, I had mentioned that 82 levels are a good support. With that, it has seen this rise. Now, see what it has done with the drop yesterday is that it has filled the gap and has reversed since. Now, these are critical levels at 83.5, 83.6. If it does break past by this, you can expect 84 and then 84.4 levels. See, this is the zone 85, 85.5. Only and only if the oil stays above 85, 85.5, we can say that this is a reversal and a massive rise can be expected there. So yes, as long as 85, 85.5 levels are not breached, the possibility of a reversal again on the downside will be high. Yes, 84 is going to remain a maximum resistance zone here for today. The stochastic overbought, MACD divergent, bullish, looking upwards here on the hourly charts. RSI is also staying bullish. Coming to two. Likewise, on the 2-hour charts, one bullish candle consolidation. This candle can again stay bullish. It can try to take the prices towards 84 or 84.4 levels here, 84.4, 84.5 levels. Very good resistance is there, and if it stays above 85, consider that as an extremely bullish move, and it is going to break on the upside above 85.5. Stochastic overbought, MACD crossing over here, showing signs of bullishness. RSI looking upwards here. Coming to 3 hour. Now on the 3-hour charts, what it has done, it has filled the gap here. After filling the gap and forming higher low, see 81.4 levels earlier, now 82 levels here, has formed this base and it is trying to rise. So higher lows, higher highs suggest that it can in fact retrace towards 87.6, 88 levels as well, if not today, possibly sometime, but it has to break past this zone here at 85, 85.5 levels. Also, if you look at 3-hour charts, after forming a base, it is trying to rise. This candle can elevate the prices towards 84. There is a possibility to it. The stochastic is rising. MACD is bearish, but it is willing to converge again and cross over. It has not yet crossed over. RSI looking upwards, staying bullish. Coming to 4-hour. On the 4-hour chart, see the symmetry here. This is a symmetry. Possibly this candle can be a symmetric candle as well, else it is going to lead to this candle, which is a extremely bearish candle. So it can nullify some of the losses here. It can try to move towards 84, 84.2 zone, which is going to be a greater resistance zone. And if it stays above 85, consider that as a reversal, and we are going to look forward to a complete reversal here. Now see, though it is symmetrical, but look at the candle size here has increased, and if this candle or this candle size increases to this, certainly we can say that it is going to break past 85 as well. Stochastic rising, MACD is bearish, trying to converge for a crossover to a buy. RSI is flat. Coming to the daily, on the daily charts, candle started from the double bottom levels and it has resumed its upward move beyond 83.5, 83.6 is where we can see little more bullishness. Now remember, previously 83.8, 84 was a good support, and today it is going to remain a greater resistance, and hence any move above 84 should bring little more bullishness, which might in fact make oil erase the losses from yesterday and move beyond 85. Possibility exists for this, but you have to be extremely cautious at around 84 levels, which is going to provide it a very good resistance here. And also at the same time, a drop below 82.4 you can initiate, or rather I will say you can sell here at 83 or 82.8 itself. Selling at 82.8, 82.4 is the first target, 82 is the next, and any drop below 82 should bring the bears out here, which will give it a extremely bearish move, because see, this is the first red candle. There could be a second red candle which could take it towards 80. Remember, it is just at the half of this candle, and hence it can completely reverse from here. Stochastic is looking downwards, MACD is bearish, and this is the only observation here, that MACD is trading with extreme divergence and it should possibly converge a little, which means a greener candle here. RSI is rising. Considering this, first I will recommend you to sell at 82.8, expect 82.4, 82. These are the two major support levels. Any drop below 82 and 81.4, you can say that definitely we are looking forward to $80 levels here. Now, yes, there are nearby supports at 81.4 and 81, but still I will look forward to 80 if the prices stays below 81.4. On the upside, you can buy here at 83.5, 83.4 levels, but with the caution note that 83.8, 84 is the first resistance zone, and beyond 84 we can expect the bulls to take over there. In fact, it can try to erase all the losses from yesterday and break past 85 as well. Take your positions accordingly. 84 is the greater resistance, be careful there, and on the downside 82 is a greater support, be careful there. Trade accordingly, trade profitably, and with the trailing stop loss. Do like, share, subscribe and comment. Join my mentorship batch or signals channel. Reach out to me for any of your trading or training queries. Do like, share, subscribe and comment as well. Thank you. Have a great profitable trading day. I'll see you tomorrow with more updates with the Asia and Europe session for gold and crude oil. Watch that update as well. Thank you.